Hey guys and gals, welcome to this week's pre-foreclosure daily grind tip of the week. Chris the Drummer Bowles, Bob LaChance. Hopefully everyone's doing great. We have some great tips this week, 3 in particular. One of them we're going to talk about a HAFA change within HAFA in reference to seller concessions. Chris is going to dig into that. It's really cool. So number 1. Number 2, we're going to talk about second mortgages and mortgage insurance company and what they're actually offering our clients for either a settlement or a long-term payment plan. We're just going to get into a couple different companies that we dealt with lately. Pretty cool. And then finally, number 3, we're going to talk about short sale documents and when you fax them into the lender, actually where they go and whether the bank will throw them in the garbage or keep them on file. Okay?
Right.
That's pretty much the breakdown of it. Before we get into that, I just wanted to throw out a little shout out to FinderSolution.com, which is our online management database. It's unbelievable. We call it a workspace where we manage all of our contacts, email domains, websites, squeeze pages, so on and so forth, all in one spot. Great for any small business. So anyway, check out FinderSolution.com. Chris, let's talk about HAFA program.
Okay. Basically with this, I was talking to a negotiator, Chase, the other day, and we were talking about the file, the offer, and that kind of stuff. She happened to mention, that with this being a HAFA short sale, that concessions would not be allowed. And I was kind of like taken aback for a minute. I asked her about it, and basically here's kind of the breakdown. The investor that owns the mortgage, as we all know.
Let me interrupt you for a second. That's when a buyer coming in is asking for the seller to pay for some sort of closing costs for them. That's seller concessions. So that's what you're referencing.
Right. Basically, the investor that's behind the mortgage, as we all know, is going to try to recover as much money as possible. And the other thing, which we may or may not know, with HAFA short sales, that upon success of the short sale, upon its completion, that the seller, part of the program is that they get $3,000. So basically, what the negotiator was explaining.
Good money right there, isn't it?
I'd take it. Basically, what the negotiator was explaining was that when it comes time to do a HAFA short sale, the seller is going to have a choice on whether or not they want to take that $3,000, or if they want to go ahead and push the offer if a buyer comes in looking for seller concessions, if they want to push that offer with the concessions. Because basically, bottom line, investor's not going to allow for that $3,000 credit and approve the concessions at the same time.
Cool.
So,
and that actually, I like that.
Yeah.
I personally like that. That's really good. So you offset some of the costs, put it back on them. That's pretty good.
Yeah.
That's the first one. That's really cool. Let's talk about the second mortgages.
Okay. We've had recently a couple banks that we deal with a lot, HSBC and Bank of America, have kind of switched things up a little bit, added another dimension to how they review these second mortgages and go about looking to approve them for a short sale. We've had with HSBC, first off, because they started doing this a couple months ago, where they'll send a settlement offer to the homeowner.
It's a pre-short sale settlement offer.
Right. That's not within the bounds of a short sale at all. They're basically just saying, hey, we'll take X amount of dollars if you can come up with it and send it to us at any time. We'll take it. We'll release this lien and we'll settle it in full.
Yeah, and that does have an end date to it. They'll give you a window that you have to pay it, and once that window's done, then it's off. Then it goes to the short sale department.
Right, or it goes to recovery depending on how many months the seller is in default. B of A has more recently changed their policy. A lot of us who have dealt with second mortgages with B of A,
half of our files,
enjoyed those responses we'd get from them when they'd say we'd like a bazillion dollars at closing, and that's your only option. Now what they're doing is they're giving us 2 options. First option is for a lesser amount at closing, and then leaving the remaining balance to be a collectible balance
and a promissory note
in which the seller will pay a range of payment plan on. The second option is to send in a higher amount to pay B of A a higher amount at closing, but in this case they'll release and settle the lien in full, and that remaining balance is a non-collectible balance.
The last one we got in one of our settlements was a $51,000 settled in full. Now, if our client has $51,000 hanging around, do you think they'd be in this position?
Right.
Probably not.
Right.
But anyway, that's besides the point. So those are the updates. Those are actually really good. And finally, Chris, let's talk about when you fax in your short sale package, where it goes and how do you not get it thrown in garbage?
Right. Well, we have, first off, we have a lot of agents who are like, wait a minute, didn't we already send that in?
That part of that short sale package in.
Right. And so basically, when it comes down to it, a lot of times you'll have, as you're going through the short sale process, when you initially send in a package, you'll usually send it to the general fax number for the short sale or loss mitigation department. Now, obviously, once we get deep into the process and we're working with the negotiator at a given bank, a lot of times that negotiator will say, here's my fax number, here's my email address, my personal one, so that any further documents can be sent directly to me. One thing to understand with this, though, is that when you send documents into the general fax number for short sale or lost mit, that's where, if you send them there, that's where they'll stay, and they'll stay on the file, whereas, even when the file is closed or declined. When you send those documents directly to the negotiator, the assigned negotiator, typically what happens in those cases is that when the short sale is declined or closed out, that negotiator is going to throw those documents out. So a good rule of thumb, and this is what actually B of A will say this to you, is they'll say send them into the general number and directly to the negotiator. That way everybody gets them, the negotiators got them right away, but they're on file everywhere so that...
And this will come into play when there's either a counter offer, and if our client doesn't like the counter offer and they close the file, this is a good way to keep your documents actually on file within the lender. Because if a certain negotiator closes your file and they throw it off their desk, at least your documents are stored somewhere so you don't have to send everything back again.
Yeah, you're going to have, and obviously just, on that, a point on that, obviously certain things you're going to have to resubmit. If you have a new offer, obviously you got to send the new contract with the HUD to go with it. And obviously if we've all done short sales, we know that pay stubs, bank statements are going to have to be updated periodically. So, there's certain things you'll have to resend anyways. But
the core documents
the
like
core
tax
stuff.
Returns, W-2s, hardship letter, the financial statement that you sent at that time, typically those stay on file at that time. So it's pretty good.
Right.
Good tip, Chris. Again. But anyway, guys and gals, check out, again, like I said before, we're in our beta of finersolution.com. Check it out. Free for you right now. It's got a whole free component to it. Fantastic. Anyway, Chris the Drummer Bowes, Bob LaChance getting back to you with this week's pre-foreclosure tip of the week.